Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. A key reversal down yesterday, if only just, as the market ran up into the upper bear channel line, currently at 105.75, with the mid-July to date bear channel, and that's currently between 103.24 to 105.75, and that's highlighted in bright red on my daily chart. And once up there, it hesitated and peeled off back lower by the end of the session. Though this bear channel originated in July, its main effects were felt in early September when it caused a breakdown below the mid-March to mid-July bull channel, the one highlighted in dark blue on my daily chart. Targets for this original bull channel on the downside were a primary target X in the 105.95 zone and a secondary much harder to reach target X1 in the 101.35 zone. The primary target was achieved in late August, but the secondary target X1 is still open, though still looking very hard to reach, especially as the market has recently decided to use the March and February and March 2017 lows at 104.92 as a base. However, the upper bear channel line drops down through this support within the next 2 weeks, so something will have to give. So far today, well, nothing much as yet, either side of yesterday's close. Cable, aka sterling against the US dollar. A second bearish black crow yesterday, and a follow-on to the previous session's bearish dark cloud cover pattern and hanging man pattern. The market continues to exhibit a wide-ranging indecision between the May 2020 low at 120.73 and the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. The main recent feature here had been the breakdown below and out of the March to August rising wedge pattern, highlighted on my daily chart in bright red. The targets for such a pattern were a primary target in the 124.10 zone and a much harder to reach secondary target X1 in the 116.05 zone. Now, the primary target was achieved in mid-September, but the secondary target looks very much out of reach as the market has decided to hesitate between the May 2020 low at 120.73 and the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. So far today, a little lower as a follow-on still. I am starting to wonder if the action since mid-August may not have elements of a bearish half hesitation, or maybe even a double bottom about it all. It's too early to say which it may be, but just keep an eye on those. Euro sterling. A bullish white soldier yesterday, but the market overall continues to be caught between the overhead slowly declining long moving average, currently at 86.94, highlighted in gold on my daily chart, and the twin supports below of the rising short medium moving average, currently 86.12, and the medium moving average, currently 85.98. Additionally, the declining trend line of the June to September roof pattern, currently at 85.80, is not too far below those last two moving averages, and that's highlighted in dark blue on my daily chart. The overall bigger pattern has been this June to September roof pattern, with potential targets for this pattern of a primary target X above in the 87.42 area, and a harder to reach secondary target X1 in the 88.18 area. At the moment, the long moving average is capping any attempts higher. However, beyond this, we have the April 2021 high at 87.19, but then a fairly free area up to target X. It'll be interesting to see if, as today, the long moving average is really challenged and what may be the result. Now, so far today, an attempt higher over the long moving average and testing late September's high at 87.05. Beyond that, we still have the April 2021 high. US dollar against the Indian rupee. A hanging man pattern and a second bullish white soldier yesterday as the market breached both the October 2022 high at 83.27 and the previously breached but so far unbroken mid-August to date downtrend, currently at 83.23. I've been studying this daily chart in greater detail today, and I'd like to point out a possible, if a ramshackle, late July to date ascending triangle. Now, I haven't highlighted it on my daily chart as yet, but it is made up of the late July to date uptrend, currently at 83.21, and the previously mentioned downtrend. If this indeed turns out to be the case, then this might be the break higher out of this pattern. Please note it is early yet, and the chances of a false break higher are still quite high. Now, so far today, an open on the October 2022 high with a limited move higher, but also a limited move lower, down to the breach downtrend, which so far has held up. US dollar against the Brazilian real. A bullish white soldier yesterday that was capped by one Fibonacci line at 507.39 and closed on another Fibonacci line at 505.73. Overall, the market continues to be moving within the breached, but ultimately still valid, November 2022 to date bear channel. That's currently between 471.31 to 517.25. And that's highlighted in bright red on my daily chart. The most recent incident involving this bear channel had been how the upper bear channel line had capped the market in early October. Meanwhile, below we have a load of supports consisting of the flatlining long moving average, currently at 499.98, highlighted in gold on my daily chart, then the upper trend line extension, highlighted in purple on my daily chart, of the August to September rectangle pattern, currently at 498.15. The rising short medium moving average, currently 497.38, and a 50% Fibonacci line of the October 2019 to May 2020 move at 496.61. US dollar against the Mexican peso. A second bullish white soldier and a suitable follow-on higher to the previous session's immediate countering bullish harami. The market continues to move higher and away from the long moving average, currently at 1773.01, closing significantly over the attractor of the bright red neckline, currently 1803.88, of the July to September lopsided reverse head and shoulders bottom, and right on the neckline, highlighted in purple, of the old but still influential January to May 2021 head and shoulders top, currently at 1823.91. The market has already managed to achieve some notable targets on the top side. The primary target for March-July descending wedge pattern, the pattern highlighted in bright green on my daily chart, as was the primary target for the break higher out of the long-term September 22 to October 2023 bear channel, and that's the pattern highlighted in dark blue on my daily chart. However, the harder to reach secondary target X2 for the descending wedge pattern, and also coincidentally the harder to reach secondary target for the bear channel, both at about the 1894 even area, well, those are still open higher up. I also have not placed any primary or secondary topside targets for the reverse head and shoulders bottom as yet, mainly because we are still close to the neckline, and because I'd like to see target X2 either reached or rejected. Finally, I previously mentioned the September to date bull channel, currently at 1795.39 to 1881.06, highlighted in dark green on my daily chart. I'd previously not highlighted this potential bull channel, in part because it seemed a little too early, and also because to my mind the bullish angle of attack of this potential bull channel is quite acute. However, I've relented on this idea, and you can see it more clearly now. So far today, a further move higher over the neckline, but now approaching early October's high at 1848.20 and the February 2020 low at 1851.71.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final important bit.